Get ready for a deep dive into today's top market trends. We're sifting through articles, reports, and even some tech blogs to uncover the forces shaping our world. It's all connected in ways you might not expect. From construction software to AI accountants and even the resurgence of portable media players. Today's deep dive reveals how technology, global economies, and even our personal choices are intertwined.
It's fascinating to see how these trends, often reported in isolation, create a much larger, interconnected narrative.
Let's start with construction. A report predicts the construction management software market will more than double in size by 2032, reaching a staggering $27.16 billion. That's a massive amount of digital blueprints.
This surge reflects the global construction boom, but also points to a deeper reliance on software for efficiency and integration of cutting-edge technologies, like augmented reality and drone-based inspections.
So even if we're not on construction sites, this trend reveals software's growing influence across almost every industry. It's changing how we work.
Precisely. And this technological shift is not limited to construction.
The microlearning software market is also booming. Companies like SAP Litmos and EdApp are leading the way, with bite-sized learning modules designed for our fast-paced lives.
It's a perfect example of adaptation. We're constantly bombarded with information, and microlearning offers a digestible way to acquire new skills and knowledge, fitting perfectly into our busy schedules.
It's learning reimagined for the modern age. Instead of long classes or dense manuals, we can learn during our commute or even while waiting for coffee.
Microlearning is not just convenient, it's effective. Breaking information into smaller chunks caters to our shorter attention spans, improving knowledge retention.
Now let's move to a field often seen as traditional, even a bit dry: accounting. JuanTax and Jaz Philippines are merging to create the first AI-powered accounting software in the Philippines.
This is AI disrupting a well-established industry. Imagine the possibilities: automated data entry, real-time analysis, and maybe even the end of stressful tax filing.
But new technology always brings potential concerns. Job displacement is a big one. How will AI affect the accounting profession and its workforce?
It's crucial to approach these advancements thoughtfully, using AI to enhance human capabilities, not replace them entirely. We need to focus on reskilling and upskilling workforces for an AI-driven future.
This brings up an interesting point. We've discussed the rise of software and AI. But what about the consumers driving these trends? The report on portable media players caught my attention. Apparently, they were making a comeback.
It seems counterintuitive in the smartphone era. The report cites increased purchasing power and innovation trends as the driving force.
What does that mean? Is it nostalgia? Or new features driving this renewed interest? What specific advancements are there? Is consumer behavior shifting?
Nostalgia certainly plays a role. As retro tech revivals are common, there's also a growing appreciation for dedicated devices that offer specific functionalities better than multipurpose smartphones. Perhaps people want a break from constant connectivity or seek higher quality audio experiences.
Maybe it's a bit of both. Technology isn't just about practicality. It's about our emotional connections and preferences. This specific trend might reveal a larger shift in how we interact with technology. Are we seeking more focused experiences?
Indeed. Market trends are influenced by a complex interplay of technological advancements, economic factors, and individual desires and choices.
Let's move from pocket-sized gadgets to a much larger scale. The power generation transmission and control equipment market is projected to surge from $541.24 billion in 2024 to a massive $679.7 billion by 2029.
This growth is directly tied to the escalating global demand for electricity. Growing populations and industrializing nations make reliable power generation transmission and distribution even more critical.
It's not just about basic needs. This growth is fueled by the global push for cleaner energy. We see substantial investments in renewables, like solar, wind, and hydroelectric power, to reduce reliance on fossil fuels.
This signifies a transformation in the energy sector. We're moving towards a more sustainable future. This trend will accelerate, bringing its own set of challenges, like managing grid stability and ensuring access to clean energy.
While these numbers represent progress, they also highlight the complexity of energy transition and the need for innovative solutions. Now let's delve into cutting-edge territory. We're talking Web3 influencers and something called Mevvy.
This fascinating intersection of trends speaks volumes about the evolving digital landscape. We have the fashion influencer market, where companies like Creator IQ and Hype Auditor help brands connect with influential personalities to reach specific audiences.
It's interesting how traditional celebrity endorsements are evolving in the digital age. Influencers have built dedicated online communities and hold considerable sway over purchasing decisions. They become tastemakers in their own right.
Their impact extends beyond fashion. Influencers affect nearly every industry, from tech and gaming to travel and finance. Their ability to connect with followers personally makes them powerful marketing partners.
Then we have the world of Web3 and crypto, where things get more complex. Two companies are making headlines. Mevvy, which secured $2.8 million to disrupt MEV trading, and Freedx, which raised $50 million to transform crypto trading.
MEV, or miner extractable value, is a complex concept for those unfamiliar with blockchain technology. Imagine you want to buy a limited edition item online. Someone with faster internet might jump ahead of you in the virtual line and snag it. MEV is similar. Miners can prioritize certain transactions on the blockchain, potentially profiting from this power.
So it's like a hidden game within the blockchain, where miners can potentially manipulate the system for their benefit. How does that affect the average person who uses crypto?
Mevvy aims to create a more transparent and equitable MEV marketplace, potentially reducing the negative impacts of this practice.
And what about Freedx with their $50 million? What kind of transformation are they aiming for in crypto trading? Are they trying to make crypto more accessible or user-friendly?
The specifics are unclear, but this funding likely indicates a push for innovative trading features, enhanced security, and potentially broader access to crypto trading.
It's incredible how much activity and innovation are happening in the Web3 space, even amidst the volatility and skepticism surrounding cryptocurrencies. What do you think is driving this persistent interest, despite the risks?
Indeed, and it's not just startups. Even Chainlink, a well-established player in the blockchain world, is addressing MEV. They're offering a framework to help DeFi protocols manage MEV, prioritizing stability and fairness.
It sounds like they're trying to establish some ground rules to prevent MEV from destabilizing decentralized finance. Is this a sign that the industry is maturing and trying to self-regulate?
The goal is to create a more robust and trustworthy DeFi ecosystem. A major player like Chainlink tackling this issue head-on suggests MEV is a serious concern.
It's amazing how these seemingly disparate trends, from fashion influencers to complex blockchain concepts, are all interconnected in this constantly evolving digital landscape. In the first part of our deep dive, we explore the impact of software AI and the shifting landscape of digital consumption. Now let's turn our attention to a topic that's likely on everyone's mind: personal finances.
It's true when we discuss market trends, it's hard not to consider their impact on our wallets.
So what's happening in the world of finance and investments that we should be paying attention to?
One of the most significant trends is the increasing accessibility of investing. It's no longer exclusive to Wall Street or the wealthy. Technology is democratizing access to financial markets, making it easier for everyday people to invest and grow their wealth.
We're seeing a surge in online brokerage platforms, robo-advisors, and fractional share ownership, which allows investing in expensive stocks with just a few dollars. It's empowering.
And it's not just stocks anymore. The rise of alternative investments like cryptocurrencies, real estate crowdfunding, and even art and collectibles opens up a whole new world of possibilities for investors.
But with so many options, it could be overwhelming. How can we make sense of this complex landscape and make informed decisions?
Education and due diligence are paramount. Understanding the risks and potential rewards associated with different investment strategies is crucial. Diversification, spreading investments across various asset classes to mitigate risk, remains key.
Having a clear investment strategy aligned with financial goals and risk tolerance is also essential. Defining your objectives will help navigate the myriad investment options. Are you looking for long-term growth, short-term gains, or a balance?
And don't underestimate the value of advice from qualified financial professionals. They can provide personalized guidance tailored to your specific circumstances, helping you avoid common pitfalls.
Let's talk about sustainable investing. More people are aligning their investments with their values, supporting companies prioritizing environmental, social, and governance (ESG) factors.
It's a powerful shift in investor sentiment. Financial returns shouldn't come at the expense of our planet or social well-being. We see a growing number of ESG-focused funds and investment products catering to this demand.
It's not just about doing good, it's about making sound financial decisions. Studies show that companies with strong ESG practices often outperform their peers over time.
It's a win-win. Profitability and sustainability can go hand in hand. Now let's explore decentralized finance, or DeFi.
DeFi aims to revolutionize traditional finance by leveraging blockchain technology to create decentralized, transparent, and accessible financial services.
We see decentralized lending platforms, stablecoins, and even decentralized exchanges emerging, challenging the dominance of traditional financial institutions.
But DeFi is still in its early stages, and risks exist. The volatility of cryptocurrencies, potential for hacks and scams, and the lack of regulatory oversight are all factors to consider.
However, DeFi's potential is undeniable. It can empower individuals, increase financial inclusion, and create a more equitable financial system.
It's a fascinating space to watch as it evolves. Now let's discuss a trend impacting everyone, regardless of their investment portfolio: inflation.
Inflation has been a hot topic. With rising prices eroding our purchasing power, it's a complex issue with multiple contributing factors, including supply chain disruptions, increased demand, and government policies.
It's not just about the numbers. It's about the real-world impact. Rising food, energy, and housing costs strain household budgets, especially for those on fixed incomes.
Individuals need to understand how inflation affects their financial well-being and explore strategies to mitigate its impact.
This means budgeting, carefully seeking ways to increase income, and considering investments that can outpace inflation, such as real estate or commodities.
Staying informed about economic trends and adapting financial plans as needed is also crucial. Flexibility and adaptability are key in navigating inflationary environments. Let's move on to a topic closely tied to inflation: interest rates.
Central banks worldwide are raising interest rates to curb inflation. While this can cool an overheated economy, it also has implications for borrowers and savers.
Higher interest rates mean higher borrowing costs for mortgages, loans, and credit cards, making financing purchases more expensive and straining household budgets.
Conversely, higher rates benefit savers, as they earn more interest on deposits. It's a balancing act for central banks to find the right rate to manage inflation, without hindering economic growth.
Remember that interest rate changes have a ripple effect throughout the economy, influencing everything from consumer spending to business investment.
It's a reminder that all these market trends are interconnected. What happens in one area can significantly impact other parts of the economy. It's like a complex web constantly in motion.
That's why staying informed is crucial. Be aware of the trends shaping the financial landscape and be prepared to adapt your strategies accordingly.
We've covered a lot in this segment: the rise of accessible investing, and the complexities of DeFi, and the challenges of inflation and rising interest rates. But it's just a glimpse into the dynamic world of finance and investments. In this final part of our deep dive, we'll explore emerging trends shaping the future of money itself. Get ready for a journey into digital currencies, blockchain technology, and the evolution of financial systems.
It's captivating how technology is not just changing how we manage money, but redefining what money is. We're moving beyond traditional currencies into a realm where digital assets and blockchain technology are center stage.
It's mind-boggling to think we might be witnessing the birth of a new financial system, one that's more transparent, accessible, and potentially more equitable.
One prominent trend is the rise of central bank digital currencies, or CBDCs. Governments worldwide are exploring issuing their own digital currencies, backed by their central banks.
Imagine holding digital dollars or euros directly with the central bank, bypassing commercial banks entirely. It could revolutionize how we transact and interact with the financial system.
CBDCs could increase financial inclusion, reduce transaction costs, and enhance monetary policy efficiency. However, they also raise questions about privacy, security, and the role of traditional banks.
It's a complex landscape with far-reaching implications. We're just beginning to grasp the potential consequences. Let's shift our focus to another trend pushing the boundaries of finance: the metaverse.
The metaverse is often described as a persistent, immersive digital world where people can interact, work, play, and even conduct financial transactions. It blurs the lines between the physical and digital, creating new opportunities for commerce and innovation.
We're seeing virtual real estate booming, digital fashion becoming a status symbol, and virtual concerts and events attracting massive audiences. A new economy is emerging, and it's fascinating to see how traditional financial concepts are being adapted to this virtual world.
Think about it. You could purchase virtual land, build a virtual business, and earn a virtual currency that you can then use to buy real-world goods and services. The possibilities are endless. However, the metaverse presents unique challenges, from defining property rights and establishing governance, to ensuring user safety and preventing fraud.
It's a rapidly evolving space. It'll be fascinating to see how it unfolds in the coming years. Now let's touch on a trend transforming philanthropy and social impact: Impact investing.
Impact investing goes beyond donating to charities. It involves investing in companies and organizations actively addressing social and environmental challenges while generating financial returns.
It's about aligning your investments with your values, using your capital to make a positive impact on the world, while growing your wealth.
We're seeing a surge in impact investing across various sectors, from renewable energy and sustainable agriculture to healthcare and education. It demonstrates that doing good and doing well are no longer mutually exclusive.
As we wrap up this deep dive into market trends, it's clear that we're living in a time of unprecedented change and innovation. From software revolutionizing industries to digital currencies and the metaverse, technology is reshaping our world at an astonishing pace.
Amidst all this change, one thing remains constant: the importance of knowledge and understanding. By staying informed about these trends, critically evaluating their potential impacts, and embracing continuous learning, we can navigate this evolving landscape and create a future that's both prosperous and sustainable.
What trends resonated with you most? Which ones do you think will have the biggest impact on your life and the world around us? We encourage you to continue exploring these topics, delving deeper into areas that spark your curiosity, and becoming active participants in shaping the future. Because the future is not something that happens to us, it's something we create together. Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep shaping the world you want to see.